let's talk today all about how to choose the right real estate operator for your investment deal, and make sure you're investing with the right people, which is the key to your long-term success. So welcome to Masters of Real Estate. My name is Mathew Owens, California licensed CPA and full-time real estate investor. And I'm here to talk to you today about picking the right team members to invest with. Take it from me, I picked the wrong ones a lot in the past, and they've really cost me a significant amount of money. I think your team members are the biggest key that will make and break any investment deal. Whether you're doing that deal yourself and hiring the contractors, hiring the property managers, hiring the realtors, hiring all of the team members yourself to do your deals, or if you're investing with an operator that actually is doing the deal for you and taking that deal down, there's some key things to really focus on when you're investing with the right team. So first things first. Every single time you invest with anybody else or hire someone as a team member, you want to make sure that you are doing a background check and criminal check on that operator, calling their references across the board to make sure that you talk to investors that have gotten their money back, understand the personality, the conservative nature, how that operator operates, how do they communicate, what do their financial reports look like, how have they performed in the past. So all of these things are indicators of an operator that you want to work with. And if they don't fit the bill on some of your assumptions here, or your take on what they're actually doing and their experience, then don't invest with them in the first place. Take your time. There's no big hurry to jump into any of these investments. You want to make sure you always do your homework first before you actually go out and start investing with an operator, and take it slow. You don't have to go swing from the fences on the very first deal. Invest in the minimums, the $25,000, $50,000 a pop if you're investing with another operator. If you're actually working with a team that you are working with yourself, that you picked out, a contractor and property manager, make sure you have tight controls in place of all of the money and checks and balances and quality control in place, right? Same thing when you're investing with another operator. If you're doing that long term, you want to make sure that you are asking questions consistently, you understand the operational performance on a quarterly basis, and know what is actually working and not working with regard to that particular deal, okay? So these are the things you should be focused on. In addition to that, what are the conservative assumptions of that operator? Are they actually going out and analyzing the deal in a fashion that makes sense to you? Are they actually going out and trying to swing from the fences and be able to, put everything hunky-dory and looking all perfect for that deal just to make the numbers look better, and they're not being conservative? You have to assess if you feel comfortable with their conservative or not conservative assumptions, and be able to determine if that's okay with you and if that's going to work with your investment strategy, okay? So those conservative assumptions will tell you a lot about an operator and the abilities that they actually can do from an operational performance basis, but also from a conservative approach. Are they there to protect investors? Are they there to be able to, take the hit first if something happens in a deal, and be able to, make money with you? Are they aligned for performance? That's one of the other biggest things that I look at is on any particular deal. Are there performance-based incentives in place? Is there a preferred return, meaning I get my money first, where I actually make a return on my money first before the operator gets paid for that deal? So I don't want to make a crappy return and then have the operator actually still get paid a bunch of money if I'm making a bad return. There should be performance-based incentives in place, so that way that operator has their best interest or your best interest at heart here when you are investing with them and trusting them to run a deal. Now, there can be some great benefits of utilizing an outside operator, right? They are qualifying for the financing. You don't have to actually go out and do that. Huge benefit. They are finding the deal. They are doing the asset management, the property management, the construction management. And trust me, as an operator myself, there are a significant amount of work with those different functions of the investment. The asset management alone is huge from a workload perspective, let alone actually managing the construction or the actual property managers or the management function on the ground, which you need to know if you're investing with these outside operators, that the contractor and the property manager and the key team members have experience, not just the operator involved from their experience level, okay? So the key team members those operators are working with is absolutely imperative to that long-term success, because the operator is only as good as their key team members involved with them. And those key team members, trust me, they can steal, they can be bad, you got to replace them sometimes. There's all types of pros and cons with those team members, and some are good at some aspects but bad at others. So you really want to dive deep into that operator's experience and their team member experience as well, so that way you know that they have the capabilities of doing the operations and performing based on their financial assumptions, right? You also want to look at how long of a deal is it that you're investing in? What do the legal docs look like? What different powers do they have and don't have with regard to that investment? Can they borrow all the money they want, or do they got to get approval for that? What happens if there's a capital call in the deal? Or do they putting their money in first and then going out to investors? Or are they diluting with outside shareholders coming in to that deal, right? What are the different aspects of control within the operating agreement that require a vote? And what are the things that the operator is allowed to do? Because you should let them have some level of control, because they need to be able to make decisions about this investment, protect you at all costs, and really focus on being able to be a good operator. And you don't want to put handcuffs on them with the legal documents. You want to give them some freedom, but on those major big ticket items, you want to have those controls and having a vote, so that way you can actually, have the right controls in place and the protections in place for investors when you're doing these types of deals, okay? So I would highly recommend, when you plan on investing with an operator, you look at their financial model of that deal and analyze it for yourself. Do you agree with those financial assumptions involved in the deal in itself? I would be focused on the markets that they invest in too. So, because not all markets are created equal, but look at the volatility of those markets, look at the changes in those markets, understand, hey, what are the risks of that particular market? For example, Texas or Florida or some of the other markets out there, they may have a major increase in insurance coming, and we're already seeing that occur. So being able to make sure that when you're looking at the financial projections, you see an increase in the insurance costs associated with that particular asset, because that is coming in the future or has already came. It's important to know what your true insurance costs are going to be, not just right at the start, but a year from now, 2 years from now, 5 years from now, and being able to predict those major changes in pricing with regard to the actual financial model. One other big ticket item that I always focus on when I'm talking with investors and operators that I'm looking at working with is understanding their idea of what the risks really are in the market. What are the risks of that particular deal, and how did the operator go out and try to mitigate those risks? I'll give you an example. So we just did a deal and took a deal down. It was a mobile home park, and on the back end refinance of that mobile home park, we put the interest rate at 9% to be conservative in case interest rates happen to rise again. I personally don't think they're going to rise again. I believe they'll probably go down to a degree. I don't know by how much, but that doesn't mean that they couldn't go up again, and we just saw that occur. So let's build that into the financial model and be conservative on the refinance interest rate. What about the exit cap rate? Sometimes people swing from the fences and say, hey, mine's trading at a 6 cap right now, so then therefore I expect to get a 6 cap in the future. Well, if the market crashes, maybe that goes to a 7 cap or something along those lines, and you should be predicting that 7 cap on your exit sale and not a 6 cap to be conservative, so that way even if there's a market correction, what the numbers are. And if it doesn't correct, you're swinging from the fences, you're kicking butt on your return on investment as well. And so understanding what the risks of that particular deal are, how the investors are protected, what the collateral looks like, what the loan amounts look like, what the market looks like in that particular deal, and the risks of that deal is imperative. And if your operator doesn't understand those risks, if they don't understand the break-even analysis when you're talking about, hey, if rents drop massively, interest rates go up, market values drop, where are we? Are we losing our shirt on the deal? Are we taking a haircut on the deal? Are we still profitable? Are we break even? Where are we at with regard to that deal? So these are some of the things that you should be focused on when you are investing in real estate, when you're investing with other operators. So I hope this helps provide some value for you guys when you're finding operators to work with. And I hope this adds some value. If you want to learn more, you can go to MathewOwens.com, MathewOwens.com, and I will be there to help you every step of the way. Talk to you soon. Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. Three of the key pillars to becoming a successful real estate investor. Number two, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number three, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.